welcome to the Echelon AI podcast, the show where we explore the future of the insurance industry as it's transformed by AI and share practical strategies to help businesses and professionals thrive. I'm your host, David, the founder of Echelon AI. At Echelon, we help insurance sector businesses scale using the latest technologies to seize a competitive advantage and leap ahead in this fast-paced world. Today, I am excited to welcome Erjon Skora, co-founder and head of insurance and operations at OpCover. With 17 years in insurance and extensive experience in insurtech companies, Erjon previously worked with Cover Genius, helping major partners like Amazon, eBay, and Ryanair embed insurance into their customer journeys. Now, with OpCover, he's pioneering specialized insurance solutions for the medical tourism market, a niche traditionally overlooked by conventional providers. His company creates tailored coverage for people traveling internationally for medical treatments, working with clinics and healthcare facilities worldwide. Erjon, welcome to the show.
Hi, David. Thank you for having me. It's great to be here, and thank you for the introduction as well.
Pleasure to have you on the show. Now, as a co-founder of OpCover, you're bringing innovative insurance solutions to the medical tourism sector. Could you share the origin story behind OpCover and what inspired you to focus on this underserved niche?
Yeah, so as you mentioned, I've done quite a few insurtech products within the retail industry, especially on the travel. You mentioned Ryanair, but we work as well with some of the largest airline companies across Europe and globally, including Turkish Airlines, Air Baltic, and some smaller ones like Air Malta and so on. This happened where I was in Cover Genius, and prior to that, I would service as well large banks with travel insurance propositions like ING across Europe. Now, in travel insurance products, when you see you have some exclusions there, and the main exclusions are around traveling for certain reasons, and one of the reasons that would always exclude while building these products would be medical tourism purposes. So all insurance companies pretty much have a cancellation in place for that specific reason. We looked at the market back a few years back, and then we noticed that there are a bunch of customers globally traveling for these reasons. These can be quantified in the range of 10 to 15 million customers and people every year wanting to travel somewhere and then undertake a treatment. Can be a surgery, plastic surgery, a nose job, a neck lift, a hair transplant, or a dental treatment. So imagine you're going in Malaysia and then you have the opportunity to undertake treatment for the same quality, but very with a cheaper price. So in those cases, we'd notice as well, hearing some partners that their customers would ask them all the time about insurance. So then we started speaking with some potential, with some marketplaces and building a proposition exclusively for them, a proposition to embed in the marketplace as a protection, part of the core business, servicing their customers and allowing customers to have an additional peace of mind when doing some treatments, elective treatments abroad. That was the reason and how this started.
Yeah, that's super interesting and super insightful as well. I mean, you worked for these major, provided services and worked with these major organizations, and there was something that you noticed, a repeating pattern, right? These exclusions. Everyone's being excluded from medical tourism, but nobody's providing it. I mean, with an entrepreneurial mind, it's pretty easy to spot an opportunity such as that. It makes me curious and wonder why perhaps no one else has approached it before. What are your thoughts on that?
Yes, so some people have tried. The main challenge was the risk, being it a risk in terms of, quite a problem for insurance companies and being unable to service it in a traditional way. When this product is purchased online direct to consumer, it can lead to a few fraudulent type of claims or situation that insurance companies wouldn't be able to handle. Therefore, most of the customers of the patients trying to go elsewhere for treatments wouldn't be able to get insurance. So the way we looked into it was combining technology with the human expertise, and not just to be able to take a policy from A to B, but be able to enhance that human capabilities when it would come to managing claims as well, which is the hardest part, if you allow me.
So it sounds like you're working directly with these clinics and medical procedure providers and underwriting them individually to assess the risk. Now, generally, the risk is kind of just assessed with the end user or the policy holder, right? What are the odds something will happen to them based off of their age, where they live, maybe habits or travel as well? How is it that this really fits in to everything that you're doing?
Yes, so that's a good point I didn't mention. Another one of the other issues there was the data available to be able to assess the risk. When going directly to clinics and facilitators and marketplaces, and building a proposition that was embedded and integrated into the core service of these entities, so that can be medical clinics, facilitators and hospitals, being able to understand the risk directly with them and defining a product that's exactly tailored to what their customers were asking at the time, and then go by trials. So test a few things, then from there increase the benefits and give to customers something more and see what happens. So in most cases, we partner with the companies who provide these services to enhance their capabilities rather than just do risk transfer. So in a scenario where it's a pure risk transfer type of situation with limited data in the space, it is really hard to assess it. But then when you partner and define product and the risk based on their actual needs and what they actually are providing to customers, it can be possible, especially when tied to a few technological instruments and tools that we would use alongside them to make sure that the distribution and then the underwriting and the claims capabilities were aligned with our expectations as well.
It makes a lot of sense. And we'll get to the AI aspect later. But of course, with the advent of AI, this is really making things interesting and possible for you at OpCover. Now, previously, you spent 17 years in the insurance industry so far, a little over half of that with insurtech companies. What sorts of insights did you take from your experience at Cover Genius, working with major partners like Amazon and eBay, to apply to what you're doing now?
Yes, so there have been a few insights, and before Cover Genius, I've done about nine years within the insurtech space. So that's since 2016, when the insurtech term was starting to come out. So the insights that I've gathered is, first off, the tech companies we'd work with. So I've worked a lot with partners such as Amazon and eBay, and as you mentioned, then Ryanair, Turkish Airlines, ING, and so on. Apart from the banks, most of them, first off, don't really understand or like insurance in terms of the regulatory constraints and the high barriers to entry. And they're technology companies by design, therefore tend to run really fast and don't appreciate roadmaps of 1 or 2 or 3 years that can be in some cases. So one of the greatest insights that I have gathered has been time to market needs to be pretty fast. So if it goes beyond 3 months, it becomes something else. It's not anymore a product launch. Other insights have been situations where we have understood that customers value a lot. So the end customers value a lot the ability to have an insurance proposition at the point of sale, therefore convenience, as opposed to having a very complex type of product that can provide them benefits for any possible future situation. So being able to purchase insurance at the point of sale that's exactly tailored to their needs in a way that is hands-off for them. So a one-click type of proposition with benefits that are tailored to the, let's say, transactional information. So information that are there, but nobody sees it unless there is a good integration with the different platforms. So can allow for a very swift, frictionless purchase experience, but eventually a frictionless claims experience as well, which is the other part very important. So trust. Most people don't trust insurers. And I think there's some truth to that on the customer side, meaning most of the time you've found as well, found yourself in situations where you get asked a lot of questions from an insurance company that would seem like someone is trying not to pay a claim. So this is how the industry works, though. And then we went through and redesigned the insurance products from scratch to make sure that those were easy to understand, easy to purchase, and at claims time it would be easy as well to submit the claim and eventually to consume that product. So to be able for the insurance company, for us to approve that claim too.
That's super interesting and very insightful. I mean, even just with what you were saying about your focus on the end user and providing them with a seamless, easy experience, whereas generally with travel insurance, people need to go through a quote, as with anything else, put in the information, where they're traveling, when they're traveling, what conditions they have, etc. It sounds like you're really embedding this in to the provider at the end of the day, provider of the services, of course, into the marketplace to make it as easy and seamless for them as possible, so that the policy holder or the consumer doesn't really actually know anything about OpCover. You can cut out that middleman transaction. You can go straight to your partners, and you don't really have to worry. It sounds like you don't really have to worry about selling your product so much as just partnering with clinics, hospitals, and health service providers who are already in need of your services.
So that is correct. Our goal eventually is to be 100% invisible. So eventually we would want to be as good as, allow me the term, parametric in a sense when it comes to consuming the product, so making a claim. Now that's not yet possible, meaning we have still some way to get there, but the goal is for us not to be involved in that customer journey at all, and that would remove all the frictions. So the main value proposition is the ability for the customers to have an experience that's from the beginning to the end while seeking medical tourism services elsewhere abroad over the counter in a way that they don't have to worry about insurance, they don't have to worry about possible complications, they don't have to worry about situations where they come back, have an issue, they need to fly back and so on. So we would be taking care of all of that process.
Very cool, very cool. You mentioned something a minute ago, Erjon, that I was curious to learn a little bit more about when it comes to compliance, right? Now working, as I understand it, you're working on you operate on an international risk basis from Guernsey, right? But of course, you're providing coverage all across the world, different places, different people, different procedures. What sort of regulatory or compliance hurdles did you face establishing this model, and how did you overcome them?
Yes, so one of the challenges when we looked at the market was the fragmentation of the market on a global level. So we'd have about 400,000 customers in the UK traveling elsewhere. If we were to set up an insurance entity in the UK servicing UK customers, that wouldn't be feasible and enough. There wouldn't be enough market size for us to have a sustainable business and return on investment. It's the same thing, a similar thing if we did it across all and every European jurisdiction. So we'd have another 300,000 potential customers in Germany and so on elsewhere in Europe, plus the US. The US is the largest market. It makes about half of the global market. So we didn't want to miss any of that. So the first goal was how to make this sustainable by having a license day one that would allow us to service all the customers traveling from anywhere to anywhere. Then one of the regulatory jurisdictions who provided this framework is the Guernsey regulatory framework. What we are currently operating as a PCC cell within the Guernsey jurisdiction that allows us to issue a policy for a risk that's defined as international risk. Therefore, for customers traveling from one country to another where the risk doesn't sit in either country because it's across borders. And this was the best way to do it. How easy or difficult that was, it took a while, but eventually it's doable.
I was going to say, it sounds like this is something that took a while to come together because of all of the considerations you had and surely all the research and conversations you had to have around compliance and the regulations. Something that you mentioned is that the medical tourism market is very fragmented. What sort of strategies really have been the most effective for you to establish partnerships with healthcare providers in such a fragmented space?
Yes, so it's surprisingly enough, this was a very visible need amongst all our potential partners. So the luck that we'd have is speaking with the right people. So going and seeking actual specialized agencies in this space and medical facilities and clinics and so on there is a growing need for destination countries such as Eastern Europe or Turkey and Asian-based clinics as well, for them to grow their inbound customer base. So this product provides an additional peace of mind to their core business and can be a very simple and easy way to tie it in with the core business as well. So we were lucky in that. There are events and there are a few events organized globally in this space. So we were lucky into defining those events correctly and joining those and presenting our value proposition. And it was welcomed pretty much since day one.
Well, Erjon, it sounds like maybe a term that we could use is a starving market, right? There's a starving market for what it is that you're providing. Not enough people with access to what you have, combined with the value proposition and what you actually do. Sounds like you're in almost a unique situation in a way, where most startups have difficulty with client acquisition because there's many similar competing products, where it's hard to initially have people understand, especially with something that's innovative, the true value behind it. But it sounds like this is something that has been needed for a while. So it's been relatively straightforward or easy for you to connect with the people and the clinics and who you would like to work with, your clients. However, it sounds like there's some other pretty major challenges that you have, right? Just with the sheer amount of data that you need to consume and collect to underwrite these types of risks with various partners all across the world. Can you tell me a little bit about how it is that you're approaching this?
Yes, so it is a market where there is a visible need. It is a niche market as well. Therefore, the data available to ingest in our different tools that we try to use on a daily basis to be able to operate in a way that's automated and everything else is limited. This is a niche type of market where the data available is quite limited when you try to ingest those in the different AI tools that we're using. And then another challenge with that is having to speak with different fragmented type of partners globally. So requiring a lot of workforce and intellectual horsepower when it comes to different people having to service different jurisdictions with different languages and so on. And then the other challenge is making sure that that process is the same everywhere. Now, what we have looked into, I personally like niche markets because you have the opportunity, a unique opportunity to service those customers with a proposition that's exactly tailored to their needs. So we found ourselves benefiting from a situation that allows us to grow that market and increase and get to other niche markets as well, like servicing the same customers with additional products like travel, traditional type of travel insurances, or anything else that can be a health type of proposition, partnering with other companies as well. So that's the opportunity that we get. So in terms of being able to service the customers as well with different tools, we would be placed in a unique position to gathering information that hasn't been available out there until a while ago, but be in the front row when trying to build something else in the same space.
Very nice. So there's something that you mentioned there that I'd love to get into now as well, just in terms of AI, right? With all this data that you're consuming, different language, different places, different regulations, all of these things, and a massive amount of data, although a niche market, so the amount of data that you might like to have isn't necessarily accessible. There's still a lot that you have to go through and process, especially as a startup company, right? So where is it that AI is fitting into this, and how is it really helping you through these challenges?
Yes, so first off, before getting into where AI fits for us, I wanted to kind of make just a small paragraph around chasing technology without strategy kind of situation. The first thought that came to our mind was obviously using AI, being able to automate certain processes, but eventually the risk there as well is chasing the latest tiny shiny tool without having a clear strategy in mind and without focusing on the return on investment of that investment that we were planning to do, and without actually enhancing the human touch which is we would expect we do have a 100% a human intervention in everything that and we use technology as a way to enhance that rather than replace it. And we make sure that when we did our first analysis on how to use it is that we have clear in mind what is it that's our expected return on investment, and we wouldn't want to overwhelm the staff or create other issues and therefore needing additional staff to actually fix that problem that we eventually would create utilizing technology that's not really tailored to that actual activity that we are doing. Mm-hmm. So this is what we did on a generally speaking.
So this is a very measurable approach that you're taking to AI before you decide how to start using it, because there's lots of ways that it could be used theoretically, a lot of shiny objects out there, but focusing on actual tangible business value rather than just following trends is something that everyone needs to take into consideration. Now, at OpCover, what criteria do you use to evaluate where AI can add an enhancement to the human operations versus where the traditional approach really still works best?
So first of all, we need to see what is the core service that we are providing and the core product. We do a lot. So in OpCover, our core service is to create a peace of mind for people, additional peace of mind for people traveling for medical tourism purposes. But before that, we even see that it was pretty hard for people to actually purchase a policy. So we went on partnering, like you said, like you mentioned, with the companies issuing the medical treatments and making sure that our product is perfectly integrated within that service. So in that space, we needed necessarily a few tools. First off, that's even before AI would need an API integration, but then the AI that we utilized, that we define in that case, would be a lot around customer service. So how do we answer all the queries and the questions from customers without having to have in place necessarily someone that speaks or people in different regions. So that was one space that we try to tackle right up front. And then other metrics that we use would be focus on the right metrics. So sometimes some businesses make the mistake to focus on what I define as vanity metrics. So the vanity metrics are metrics that are not necessarily related to profitability drivers. So don't create value. We don't have those issues, but I will mention a couple for the sake of example. So see app downloads or automation rate. These are our metrics that sure are nice to have, but eventually end up being in that vanity metrics type of space. We would then try and focus on metrics that define cost savings and increased lifetime value. This would allow us to have an impact on the decision making, avoid having a misallocation of the resources, and focus exactly on the return on investment rather than on something else that eventually wouldn't create value for us and eventually for the end customer.
Mm-hmm. I think this is a very important point to touch on again. I mean, just with that direct ROI or the direct business value that any sort of tech or AI initiative is going to bring to a business is one of the most important things to consider. I think there's generally two camps of people, Erjon, right? You have the company leaders who jump into tech and AI initiatives because things are shiny and maybe they'll get some value out of it, but there's probably going to be a lot of waste. And then you have the other side of things where people are very hesitant to embrace new technology and use AI for perhaps some of the concerns you mentioned, or for some other reasons as well, whether it be familiarity, discomfort, many things that, successful business leaders perhaps shouldn't have anymore, but they fall back into due to complacency and comfort perhaps. Now, with the executives that remain hesitant to AI adoption, based on your experience across multiple insurtech ventures, what practical advice would you give to leaders looking to start their AI journey without getting lost in the hype? You mentioned many good things that you must assess and look at, but what's a good starting point for people to assess the real business value?
Yeah, so look, there are different ways to assessing the real business value. We look at the PACE framework, so PACE framework, which is purpose, adoption, cost benefit, and evaluation. So the first thing that comes that we need to look at is the tech aligned with a business goal. So does it make sense, and what are the reasons eventually to utilize it? And the adoption would be, are people trained in the company? So there's a risk when adopting new technology and having I've been in a situation in a large corporation where someone would say from eventually procurement or the tech team would say, this is the new tool we'll be using, now use it. So eventually you feel a little bit left back, or not having been provided the right tools to be able to utilize it, therefore enhance your skills. So it gets, as a result, the exact opposite result. You need to wonder, if people are trained, would they utilize it, or would it just create an additional effort for everyone to have to figure out what to do with it and eventually not use it at all? And then there's a cost benefit that needs to be analyzed correctly. So what is the real return on investment, or is it just a hype? Then eventually, if the answer is it's just a hype, or eventually it just will help us download more have more downloads or automate certain things, but nobody really needs. So there's not a real pain point on that specific activity. And then the last one was evaluations. How will the success be measured over time? So we'd be looking at all of these metrics to be able to define correctly if that AI tool is useful or not, or is it just a hype, as I mentioned, or it's actually needed for our business. And I think this can be applied to most businesses, especially the big corporations. It can be straightforward, easy enough, and then you can dive into each and every metric if need to.
Yeah, it sounds like you've learned a lot on your journey, right? From the things you mentioned, such as the approach with the PACE method. And I think maybe some of this has arisen from firsthand experience, pain, as well as success, figuring out your way while you go along at times as well. Now, it sounds like you do have a very broad range of experience, specific and broad. For yourself, what's the most unexpected lesson that you've learned as a founder in the insurtech space that might benefit other entrepreneurs in the audience?
Yeah, so I might have fallen in the trap of sometimes just looking into the hype. And that's one. Looking into a shiny tool early on and wanting to learn about it and try to adopt it without having done a correct exercise on the actual pain points, on the needs, on the training of the team that would be able to deploy it globally eventually. That's one of the traps that I have fallen in the past, because eventually I wouldn't follow through a methodical type of model. But on the other hand, what happens is, as well, when you are very deep into the operations, you tend to miss these new tech advancements and tools, because you're so focused into making sure that the machine scales fast enough and works. There's a risk of not mind what the newest technologies are out there and what those allow you to do. So having a team of 100 people in customer services, or a TPA, so a third-party administrator, service provider that does a certain task in a traditional way, being tied to that service without introducing the right technologies, that can be an issue. So sitting on your being used to doing something and wanting to keep doing it that way, not to break legacies or traditional models, or even the things as those are in that specific moment in time, that need to have the courage to eventually break it down into smaller pieces and see where can everything be improved without worrying eventually that might make your job useless. So
yeah. And if we break some of this down into one smaller piece as well, from what you're saying, for any insurance professionals or leaders who might be considering how AI and technology can really transform their operations, what's one piece of actionable advice that you would offer to them now to help them start?
Yeah, so I would say look into the real feedback from the customers without and not using metrics that come directly from the end customers, speaking to the customers, making sure that their needs are, their feedback is received properly without the whatever filters there might be in that process from the customer providing a feedback to the top management, then receiving it, making sure that that feedback of those customers is aligned with the mission and vision of the company. I think the most powerful things within a company can come from listening correctly to the customers and making sure that that feedback is then brought in. And as long as if it's not aligned with the mission and vision of a company, there's something to be done. That would be the first step. Then diving into anything else, you can take it from there and understand what's the best way to build value from it.
Very sound advice, Erjon. Thank you. How can our listeners learn more about OpCover and maybe connect with you if they'd like to explore potential partnerships or even just continue the conversation?
Yeah, so we have information place where at opcover.com. They can reach out directly to me, either via my email, erjon@opcover.com, or via LinkedIn. We are often in defined events. We're based in London, where our headquarters are. We operate pretty much everywhere, so we can go and visit partners anywhere wherever they are.
Well, Erjon, thank you so much for joining the show today to share these insights and your thoughts and your experience with the audience.
Thank you very much for having me. This was a really good conversation.
To the listeners, thank you for tuning into the Echelon AI podcast. As always, I hope this episode has brought you valuable insight, knowledge, and inspiration. If it did, please, would you show your support by dropping us a like on this video and subscribing to the channel? Until next time, we're signing off.